As insurance companies continue to search for additional yield, some have bolstered their investments in private equity, which remained flat until 2 years ago. I'm John Weber for AM Best TV. Here to discuss a recent AM Best special report on the subject is Associate Director Jason Hopper. And Jason, can you talk to us a little bit about the shift towards private equities as it pertains to the three main industry segments?
Sure, John. As you kind of just alluded to, from 2013 2016, holdings in private equity investments were relatively flat throughout the entire insurance industry. And over the last 2 years, there's been a noticeable uptick, predominantly driven by the life annuity industry. However, PC and health have also seen their holdings increase as well.
Any idea what's driving these additional investments?
According to an audience poll we took at our 2019 Review Preview conference back in the first quarter, the #1 response to the question of what asset class are you looking to increase allocations to for this year, the #1 response was alternative assets. Private equity funds are a subcomponent of alternatives, as are hedge funds, and to a little lesser extent, I guess, the CLOs, which have also been increasing. But there has been a focus on private equity. Diversification is a key player. Private equity investments are relatively low correlated compared to other asset classes, so they are somewhat isolated. Insurtech is also likely another reason. If companies do not have the expertise or sources to commit more funds to innovation and technology in-house, investing through a private equity fund might be a way to kind of get into that space. Returns might be secondary compared to what type of value and innovations that companies can extract from the Insurtech fund. So I think both of those dynamics kind of play into the increased private equity as well.
What impact are leveraged buyouts having on private equities?
Leveraged buyouts account for about 60% of private equity funds held by insurers. So it is substantial, and it has been like that over the past 5 years or so. There hasn't been too much change in the allocations, but over the last couple years, with increased corporate leverage and things like that, leveraged buyouts might become a little bit more risky. So that's something that AM Best will continue to monitor, especially for those companies that have a more outsized exposure specifically to leveraged buyouts.
Overall, how does the level of private equity investments compare with each segment's capital and surplus?
In aggregate, relatively low. The life annuity industry has about 1/5 of their capital tied up in private equity. Both the health and PC segments are down around 10%. I would note that this is not an industry-wide phenomenon. Only about 20% of life annuity companies have investments in private equity, and again, about half that on both the PC and the health sides. And they do tend to be more the larger companies, more the highly rated companies as well. So in general, it's relatively minimal exposure, but for those that do have higher allocations to their capital and surplus, that is obviously a situation and trend that we will continue to monitor.
Thanks, Jason.
Thanks, John.
You can find the full report online at ambest.com. And for AM Best TV, I'm John Weber.